A very good morning and a terrific Tuesday to you. Welcome to today's episode of Morning Wealth. We'll talk about three things. Airbnb boosted its price range, Apple's chips and Uber's self-driving unit, record-breaking Chinese export numbers. For investors vacillating between hope for the future and the messy reality of the present, Monday provided an exercise in both. Broadly speaking, the US stocks fell as rising new wave of infections has resulted in fresh lockdowns, highly likely to affect economic activity during the final month of the year. The Dow Jones and the S&P 500 both closed down for the day, but some investors are betting big on a brighter tomorrow. Home-sharing pioneer Airbnb boosted the expected price range of its planned IPO this week by 23% at the midpoint. Airbnb followed DoorDash in boosting the price range of its long-awaited listing. The company will now offer its shares for $56 to $60 apiece, up from the previous range of $44 to $50 each, valuing it at as much as $42 billion. The increased price targets put both companies among the 5 biggest US IPOs of 2020. Delivery giant DoorDash did the same last week, boosting the midpoint of its range by about 16%. Both moves indicate strong investor demand for the shares ahead of trading that's expected to start later this week. Technology held up overall. The Nasdaq Composite ended the day higher by 0.5%. 8 of the S&P 500's 11 sectors declined on Monday. The exceptions were technology, communication stocks, as well as utilities, which is a traditional defensive play. Treasuries rose, sending the 10-year yields down by almost 4 basis points to around 0.93. Gold spiked and oil retreated. Asian equity futures are split. In other markets, the Euro Stoxx 600 declined by about 0.3% as trade talks between the European Union and UK entered a crucial stage. The British pound weakened at 0.4% against the dollar following reports suggesting that Brexit negotiations have broken down. Hong Kong's Hang Seng Index closed 1.2% lower following a Reuters report that US is readying sanctions against Chinese officials over their alleged role in disqualifying certain Hong Kong opposition lawmakers. Shares of some companies that the US government says support China's military fell in Hong Kong and Chinese trading after the index compiler FTSE Russell said that it would drop 8 Chinese stocks from major indexes. Back to the US stimulus stocks are stalled. Lawmakers are set to postpone a Friday night deadline for passing both the mammoth spending bill and the coronavirus relief as Republicans and Democrats wrangle over state and local aid as well as business liability protections. The House will vote Wednesday on a 1-week stopgap to avert a December 11 shutdown as work continues on the $1.4 trillion legislation to fund the government into 2021, to which the $908 billion aid package would be attached. News from Apple. Apple plans a series of new Mac chips aimed at outperforming Intel's fastest. The company is working on several successors to its processor that debuted in November. The next series of chips, which may come in spring next year, will be placed across updated versions of a suite of Mac products. Intel fell more than 4% on this news. Uber unloaded its self-driving car unit. The company sold the business to Aurora Innovation and took a 26% ownership stake in the startup, which it valued at $10 billion. The stake climbs to 40% when counting those held by employees and investors in Uber's autonomous driving division. Aurora will focus on driverless trucking first and later more complicated light vehicles carrying passengers. Lastly, some thoughts on China's export numbers that came out yesterday. 18 months ago, in the depths of the trade war in the US, few would have predicted that Chinese exports would be breaking records in 2020. But that is what has happened. And with wide-scale vaccine rollout in developed countries months away, that impressive strength has ways to run is what is getting reported in the Wall Street Journal. Chinese exports jumped 21.1% year over year in November, a rise that, excluding the annual Lunar New Year holiday period that typically falls sometime from January to February, was the strongest performance since 2011. The trade surplus also notched a high in dollar terms, hitting 75.4 billion. Driving that rise was a surge of exports to the US. Big consignments of new iPhones probably boosted the numbers, along with overall strong demand for other electronic goods such as computers. US factories wouldn't be equipped, most likely, to handle a jump in demand for such goods in the best of times, since electronic supply chains are concentrated in Asia. And now, with the coronavirus surging again nationwide, American factories may have even more trouble filling orders as workers are getting sick and stay at home. With US factories struggling to fill demand, a temporary surge of imports is inevitable, and that is what we have seen. This state of affairs won't last forever, but in the meantime, China seems likely to keep racking up the export numbers. That's the global market update for you to get your day started in Asia. Stay safe and healthy, and I'll speak to you tomorrow.